Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Bart P., Uranium Aristocrat, Grant E., Shane MC, Jeff D., Nick E., and Irish Contrarian. Back on the show, it's been about a year, is Bill Sheriff. Bill is the executive chairman of Encore Energy, a U.S. uranium asset explorer developer and now potential production stage company with assets spread across Texas, New Mexico, Arizona, Utah, and Wyoming. Encore is also a uranium portfolio company at SmithWeekly Research. The company is listed on the Toronto Venture Exchange under the symbol EU and also on the U.S. OTC markets under the symbol ENCUF. Bill, thanks for coming back on the show.
Thanks for having me. Lots changed in the last year.
Yeah, certainly. Well, let's kick it off, Bill, on that topic. Maybe just give us an update on the Westwater transaction closing. Some news came out today. Comments on that?
That's right. We finally received government approval. We had a pretty significant challenge ahead of us to close by the end of the year. Lots of moving parts on that transaction. We announced it, I think, the first week or if not very close to that in September to get a year-end close, going through final due diligence and getting all the regulatory permission sign-off, et cetera, and a significant amount of reclamation completed by Westwater as part of the agreement. Yeah, it was a monumental challenge, and took real teamwork to get it done. But our CEO Paul Goranson really shepherded that through the finish line on our side, and we did close it December 31st with minutes to spare before the end of the year, and just announced it today because we just got the final CFIUS government approval for the asset exchange, and yeah, we're now the owner of 2 of only 11 ISR production plants in the U.S. and look forward to getting Rosita through some minor renovations and ready to commence production in time for what we see will be a pretty good uranium market here coming up in the next 12 to 24 months, notwithstanding the current excitement.
And Bill, can you just talk briefly about the final consideration for the Westwater transaction?
Yeah, we paid what was it, about $1.8 million in our stock, amounted to about 2.5 million shares. Don't have the exact numbers in front of me, but they're on the press release there, and a little over 1%, 1.5%, almost 2% of the stock for quite a nice asset package. More than doubled our historic resources, and of course the significant aspect of it, most significant immediate aspect, were those 2 production facilities, and with minimal renovation, under $1 million in under 12 months, Rosita would be ready to flip the switch on. It's been maintained very well and renovated, so we're quite happy about that, and obviously even happier in that the share price consideration was based on the closing price of the Encore shares rather than when we announced it. When we announced it, we were at about 35 cents, if I'm not mistaken, 34, 35 cents. The transaction was priced at 89 and a fraction, so a little over 89 cents, those being Canadian numbers. It turned out to be a real windfall for us and beneficial for Westwater as well, as they moved their focus entirely into graphite. A win-win situation, and certainly gives us a great platform to advance the uranium now.
Yeah, big difference in the share price just between the announcement and the closing. So good on you on that part of it, and how you guys structured that. I think it worked out to your guys' benefit. Well, let's come back to the new acquisitions in a moment, but maybe just speak to the broad uranium market for a moment, and then also with the market cap as of late with Encore. What is your appetite going forward regarding another potential early cycle acquisition of other U.S. uranium assets?
All right. The uranium market, I think what we've seen is an awakening or a realization that we are in a vulnerable position in the uranium market. It won't take much to flip the switch from the buyer's market to the seller's market. Very different situation than we had in 2004, 2005, but not entirely dissimilar. There we had a series of unrelated events that really constrained the supply side, coupled with a resurgence in demand. And we've got the same thing, albeit for different reasons now. We've had two of the bigger mines in the world shut down due to exhaustion of supply. And then we've had, of course, the COVID-related disruptions, and all of this tying into, an increasing awareness of the uranium market on its own. And I think really what kicked it off was the Biden victory in the White House in the U.S., where we've got such a big push for green energy, and the realization that it's going to be awfully hard to get there with windmills and solar panels, and that nuclear has got to be a significant part of that. So I think all of that's culminated into this really reawakening, if you will, of the investment community into uranium. The uranium price itself hasn't done much, if anything. We're sitting at $30.40 last I saw yesterday on the spot price, still well below the incentive price to start production. It's probably right at an all-in break-even cost for a lot of the U.S. ISR deposits, but you need to have some margin in there before you start. Last I saw, it was predicted that you're going to need to see $45 a pound to start seeing any new contracting, and that's basically what Cameco's on the record with saying. So, pretty good source there. We do think that all the pieces are there and it's ready to go, but we think you'll start seeing the real move here, 12 to 24 months out. Could be a little bit earlier than that, could be a little bit later. If I were going to bet, I'd say that 12 to 24 is probably about right. If anything, it'll be, I think, a little sooner, the way things are lining up. But the key to investment, I think, really is, there'll probably be a significant correction here along the way. It's pretty typical of most markets, and certainly this one's been explosive over the last couple of months. But uranium responds so quickly, and there's so few names in the business for investors to really get a hold of, especially with production visibility. Unless you're really savvy at short-term trading, it's tough to get in and out for the corrections. And I think we're blessed to have a very strong shareholder group that's been long-term with us and continues to be. It's been an exciting time. We may see a pullback. I think we probably will in the general market, as well as the uranium sector. I think it'll be short-lived, and I think when you look at it over the next 4 or 5 years, the uranium space is going to be one of the premier places to be in the investment world.
Certainly agreed with that, and I'm not willing to bet my gold or silver ounces on any of the timing at this point. But certainly you make some good points. The valuations of the potential for correction, the audience should expect a correction of some kind. I can't get on the short side of anything when it comes to uranium. As a matter of fact, I have a policy here that we don't short natural resource stocks at all, just because I know what can happen if you're wrong one time on that. But certainly there's other sectors I would prefer to short if I was going to go short on the market, and other vehicles to do that.
Absolutely.
Talk about the Biden component of that. Trump certainly had done a pretty nice job of working on the sector. But do you think really Biden can take it to the next level and really just, with the printing press and so forth, really go after, nuclear power? What's your thoughts on the incoming administration?
Personally, I don't think it's going to be that big of an effect. There'll be some give and take here and there, and I guess a lot of that will be borne out over the next few months. I don't think it's any big secret that the vast majority of the uranium industry in the U.S. was not particularly happy with the election results. We liked it the way it was going a little bit better, I think, and was probably a bit more predictable for us. But it certainly looks like the policy is going to be print money, to throw a lot of it at infrastructure. The printing of money is going to be good for commodities from the inflationary viewpoint. The uranium thing really boils down to, policies is one thing, but it's regulatory time. I mean, it takes so much time to get anything permitted, so much time in the resource business to start with to develop projects. And you couple that with the real shortage of talent in the uranium industry. Those people that have heard me speak before know that one of my points has always been that we've missed a couple of cycles in terms of the professional and scientific talent to back the industry. and it's stretched pretty thin along across not too many production viable companies. And so we're quite feel quite fortunate to have our team on board that we've got here, and in fact actually have had for a number of years. And here again with Paul joining us just recently, or rejoining us, he'd been on our board a few years back, kind of completes the team. So I think all of those factors really, in terms of a realistic pricing and development schedule in uranium, are probably going to be more important than policy decisions. The perception in the market from those policy decisions will certainly be an important factor on share prices, but that's a short-term factor, and the reality of the business is a long-term factor. So keep it in that context.
Yeah, the restrictive nature of the incoming administration, if they revert back to past policies from, a lot of the incoming administration was also former Obama administration. So if they do go with a restrictive tendency when it comes to natural resource development, I think that's also very positive for commodity prices. Nothing else is going to be built. And, that's also one way to look at it. But I also see that they could be potentially a little bit more light on these projects for the purposes of electrification, climate change, and so forth. So it'll be interesting to see how that comes about. The other point, could you just talk just briefly about the importance of the SWU and UF6 pricing in the market?
I think the key there is, almost everybody, I would even assume everyone that's an investor, keeps track of, the uranium price or the yellow cake price. And if you're looking at gold or copper or things of that nature, that's pretty much all you need to look at is your base commodity price or your raw material price. Uranium is unique in that you've got the entire fuel chain. You've got conversion and enrichment and fabrication. And during the conversion and enrichment processes, you have trade-offs, if you will. If you're a consumer, you can purchase anywhere along that fuel cycle line and end up with your end product. So you don't necessarily have to buy the uranium. Obviously, at some point you do, because you have to have the uranium ore to be processed to go into your conversion and your enrichment. But for short-term periods, you can take advantage of capacity availability in the enrichment or conversion and get your materials without having to influence immediately the price of the uranium. So you've got to watch the whole fuel cycle, really. And in terms of big moves, you aren't going to have one move without the other.
The other point that I wanted to bring out is you're touching on the talent in the sector. I think a lot of these sectors, even when it comes to gold and copper, et cetera, are heavily weighted towards bankers and capital markets people, whereas the operational expertise is severely lacking. And I think it's probably to some degree always been that way. But in the uranium sector, the operational talent is a huge hole that needs to be filled. I think that that's a good point. A lot of the participants out there are on the capital side and people that are, administrative, that collect paychecks, in some cases instead of writing them. But an interesting set of circumstances on the talent side. Well, let's move on here. Let's talk just your appetite for further consolidation in the U.S. Is there still an appetite with your guys' market cap here? Is there still an appetite for early cycle acquisitions in the U.S.? And then let me couple that also with, do you have any appetite in places like Australia, Canada, or Africa?
Well, interesting question. Our appetite is always pretty healthy. Our ability to actually do something about it has changed. We've been pretty frugal all the way along, and we'll continue to be so. But I think, clearly when we made this move last summer and decided to become aggressive and move in the sector, that we were looking for an initial transformational transaction, which we achieved with the Westwater acquisition. It just, from an economic standpoint, doesn't make sense. I'd mentioned we have 2 of the 11 facilities, and I think probably the majority of those are held by public companies, but most of them are one-offs. And there's UEC, URE, they've got a plant, but what you've got to look at is the cost structure and the G&A. And for these plants that are 700,000, 1 million pounds a year, to have one of those and carry a complete G&A structure for that one production asset just doesn't make a lot of sense. Similarly, we're reviewing that on our 2 plants that we picked up in terms of perhaps consolidating those and increasing the capacity at Rosita and basically reclaiming Kingsville. No decision's been made, but it's certainly a possibility. And, they're 50, 60 miles apart. It's just an immediate question when you look at them is, do you want to have two cost centers when you can combine those, consolidate them, and reduce your cost per pound that's coming out? Certainly something worth considering. That same rationale, I think, applies to the whole industry. And, I think it's an industry on the ISL side that is crying out for consolidation. The conventional side doesn't have nearly that situation, since you basically got one mill, and Energy Fuels is the conventional miner and processor in the U.S. And I don't see with the permitting timelines and that sort of thing that are required, it's going to remain that way for some time. But I think there'll be some jockeying for position on the ISR side, and certainly there'll be some consolidation. Investors are going to demand it at some point during the cycle, and it makes just good, plain economic sense aside from that. So, we're aware of the players out there. We certainly aren't the biggest one by any means, but I think we've got some inherent advantages that may well see us as an active participant in that consolidation over the next couple of years. So yes, we're looking.
Paul Goranson joined the company shortly after leaving Energy Fuels. Talk about Paul's operational expertise and how that applies to these new assets. And then how important is he in regards to relations with Energy Fuels, obviously still a shareholder of Encore since I last checked, and the potential use of White Mesa and a potential future partnership there for conventional side?
Yeah, I may go in reverse order here. I don't think Energy Fuels is still a shareholder. Could be wrong, but if they are, it's a relatively small position. I think when they went through their rationalization of debt and erased the debt from their books, they probably liquidated our position a number of months ago. If not, we certainly welcome them to be a shareholder, but like I say, I think they probably changed their positioning there. Getting Paul was a real coup d'etat for us. We'd been looking for, we'd been operating under the leadership of Dennis Stover, who was one of the original patent holders and developers of the ISL technology, and is still with us as our chief technical officer. But when we became a much more aggressive day-to-day type company and flipped that switch in our thought process and corporate goals this summer, we needed someone to be in there, putting in those 15-hour days that it takes to really go somewhere. And we carefully evaluated really all the talent that was available, and we were quite pleased. And it was in terms of our list, it was quite a step. Paul was quite a few steps above the competition, and to be able to land him was really icing on the cake for us. And our can't say enough about it. He has either operated or been involved with just about every ISL project in the U.S. Has a bit of conventional experience along the way, but almost entirely ISR. And he's built plants, he's operated plants. A couple of the more notable things. Actually, his career started with URI, which was the predecessor to Westwater. So some of the assets have gone full cycle here, but having him on board to really look at the Westwater stuff was a real benefit as well, having such intimate knowledge of them. But during his career, he was president of Cameco U.S. and that obviously the biggest ISR group in the U.S. and saw those projects. Also involved with a number of Cameco's other projects, being officer level within the company. And then, of course, the one that I'm most familiar with was when he was running Mestania or Alta Mesa in Texas during the last boom, 2004 to 2007, when the spot price went from, I don't remember where it started, $20 or something, it went up to 150. He was actually the guy that was selling and setting the price. I shouldn't say he was the guy, but Alta Mesa and Mestania were the ones that were selling limited quantities into a very tight market and taking real advantage of that. So in reality, was setting the price of the spot market during the last boom. And he did such a tremendous job there with not only the marketing of the material, although that's a very important part is marketing, but also the construction, operation, design, the entire process. Not many guys out there that have that entire from concept to sales spectrum on a single project, much less a whole host of projects through his career. So yeah, I could go on for hours, but I think you get the picture there. We're quite happy to have him.
Yeah, Bill, on that point with the sales side and with these smaller production centers, do you see a need for term contracts, or are you of the opinion that spot market sales, as Paul executed last time, are sufficient for the company, or do you see you need a blend of both?
There's such a limited volume in the spot market. The spot market, as we've all seen over the last few years, is pretty stagnant. It doesn't do a whole lot. When you really see the spot market is during periods of rapid acceleration or rapid decline. And then it tends to, overreact or accentuate the price movement in either direction. Most of the product in the market is contract driven, and I don't see that changing. I think, when we plan to be in the business of profit and loss, producing a product and selling it for a profit. With that in mind, I think it's key to lock in contracts. I think I already mentioned that, Cameco's looking for 45. I don't think you'll see anybody really signing any new contracts below 40. Could be wrong, but I just don't see that. Certainly nothing significant. And I think at 50, you'll start to see, a fair number come into the market. And clearly, we will be in that category of companies looking for those sort of prices. I think you've got to have a base level to ensure your profitability, ensure the viability of your operations in the company. At the same time, it's a board decision, and we haven't reached that point yet. But I would anticipate that there would be a strong feeling within the company. Here again, this is just my opinion, so I could be wrong. We'll see what the board says, but I think there'll certainly be a reluctance to contract 100% of our production once we reach that stage. And anticipating a price rise going in, it's nice to have a flexibility to sell into the spot market, take advantage of that.
Maybe you can just state it for any potential buyers out there, but first, can you just speak to the bottom line of where you would consider signing some type of an agreement at a price of, say, call it 45? What's your thoughts on that bottom line price point? And then I guess to the other point, maybe there's some that are listening, let's hope that there's not any desperate trigger happy folks out there looking to sign a contract for the sake of signing a contract at $37 or $38. When we all know that it's probably going to be a loser, but people might try to sign that early on just to say that they've got a contract. So I would encourage people to be smart about the economics. That happens a lot with a lot of these presentations, Bill, where people talk about economics that in fact are just not true when it comes to their costs. So what's your points on that?
Your last point is probably the most significant on cost. And your all-in sustaining cost of a project's fine, but you've got to carry your G&A, you've got to carry your corporate, you've got to carry your expansion projects. Unless you plan to be a static producer, a static industry with no growth, you've got to allocate funds for that as well. I think if you're going to just peg ISR production in the U.S., you'd probably look at something around $30 for all-in sustaining costs, but and of course, each operator is going to vary from that a little bit, but that's probably a good round number. And but that doesn't mean you're going to want to sign a contract. And even if you've got a $8 margin, like in your instance where you mentioned 38, I think it's really not enough to ensure viability of an ongoing company. If you've got a cash flow need or some sort of debt service obligation, then maybe you look at that. I don't know, but I don't. Here again, I don't think that anybody's going to be too active until you see 45 and up. And I think you'll start seeing it creep in at 40. But here again, the fuel buyers are a herd group, herd instinct, and they tend to all act in unison and try and all get through the door at the same time when there's a rush. And so once the contracting really starts, you may have a few outliers, but I think here again, it's all predicated on a rising market becoming a seller's market as opposed to a buyer's market. So that part's very similar to 04 to 07, where the utility fuel buyers for the last decade primarily have had it available at whatever price they wanted to pay, within reason. But they certainly haven't had to chase prices, and they certainly haven't had to get all bulled up and chase anything. They've been in a very favorable market. And like anybody, you get kind of comfortable in that and maybe a little slow to respond, but when you respond, you tend to have to get with it. So that's my view on the contracting. Others may have different, but I think that's probably a pretty good assessment.
Yeah, no, I align with what you're saying. I think that's correct. You know, the $38 example, $8 a pound on a production center that's rolling out maybe 1 million pounds a year. When you tack on your G&A, your pipeline growth, and all your other corporate costs, that doesn't even begin to strike the surface.
No, and it certainly doesn't do anything on your earnings per share.
We'll see how this plays out. And I think the utilities, absolutely, when they come back in, it will be absolutely a rampage when it does occur. Okay, some of the new acquired assets, you know, maybe speak to, if you want, the exploration assets, but I want to focus in just a little bit on what you mentioned earlier, Rosita and Kingsville facilities. Can you just talk about the license status, permit status there? What do you see as the renovation steps, Bill? And you spoke to kind of timeline already, but maybe your timeline, assuming the uranium market was amenable, we had, say, $40 uranium, and there's a little bit of anticipation to get going. What's your thoughts on timeline, permitting status, et cetera, at these facilities?
Well, both facilities are fully permitted. Simple fact of the matter is Rosita has been maintained in better shape than Kingsville. The predecessor company, URI and Westwater, had gone through a renovation of the facilities back, a number of years ago here, but in keeping with the last uranium boom, and have not really done much with them other than care and maintenance since. Simple fact of the weather, Kingsville is very close to the ocean, to the Gulf of Mexico, and Rosita is inland a bit, and so it doesn't take nearly the effect of weathering. And it's been maintained very well. In terms of what we need to do under its current operational status of 800,000 pounds a year is basically just sprucing it up a bit, changing some of the controls and improving some of it, but really not a lot. That's why, like I say, it's under $1 million, under 12 months. And you know, those are estimates that the group's pretty doggone comfortable with. You know, I think the bigger key is the number of, you know, assets that are available to run through those plants. And, you know, that's one thing we definitely don't have at the moment, are 43,101 pounds to run through the plant. So that'll be a major push this year, is to develop some 43,101 resources. We have historic resources that, you know, we're confident in terms of the previous companies being name brand companies that have developed resources, as is quite common in the uranium industry everywhere. You know, name brand oil companies that you know, certainly did quite professional standards, or work up to professional standards. So I think we'll have good success converting those to 43,101. But there's also an awful lot of known projects in Texas that have a very good starting point, or in fact, in many instances, some established resources. Here again, generally not 43,101, but could quickly be converted. And of course, we're looking at those as well, in addition to the leases that we acquired through the transaction. So that will be, you know, two of our major focuses over the next 12 to 15 months, and that is getting Rosita operational and getting 43,101 pounds. And we think we'll be timing it just about right.
Now, just on the timelines there, and also maybe if you can just shoot for a ballpark capital cost. Let's say the time comes when you guys want to get these facilities up and running. And then also, I think you mentioned it before, 12 to 14 months on potential back to production.
Yeah, and I think the key here is your wellfield development costs are going to be more. The capital expense of getting Rosita up is, you know, like I say, less than $1 million for the facility. So once you pull the trigger and decide you're going to produce, your wellfield development cost, you know, $4 or $5 million is going to be the biggest single hurdle there.
Maybe just talk a little bit about the difference comparison between Energy Metals, their facilities back in the day, versus new facilities that Encore now owns.
Yeah, it's really very similar at first glance, but you know, when you delve into it, it's amazingly different. We took the Hobson plant on 2005, I think, and to get the license and the facility. And basically, the first thing we did is bulldoze it. It was a bucket of bolts, quite frankly. You know, the weather had taken its toll. It hadn't been modernized. It literally was a teardown and a rebuild. And you know, Uranium Energy Corp's the benefit of that. We did a nice job and rebuilt the plant, spent, I don't know, $20 million or thereabouts. And, but still, we were way ahead of the game by having that license in hand. And it was a good move for us. But, compare and contrast that to going in and basically having to just spruce up a plant and be operational. We're way ahead of the game with the current acquisition compared to where we were with Hobson. I think it's being recognized in our share price now, even without a big move in the uranium price. But it's clearly puts us ahead of where we were with the acquisition at Energy Metals.
And Bill, now correct me if I'm wrong, they're both 800,000 a year licensed facilities, and you're planning to utilize both of them when the time is right, correct?
Well, you're right on the first part. The second part, we still haven't made a corporate decision on. Here again, we are going to be over the course of the next few months. Rosita is the obvious first step. What to do with Kingsville is, a question that we haven't answered yet. One of the possibilities is to take the equipment at Kingsville and double our production size at Rosita. The other one, and the simple fact of the matter is Kingsville is going to take a lot more work to get it up and ready for production. It's also a bit off of the trend in terms of the South Texas uranium province. Rosita is smack dab in the middle of it. So its location is better. If you start looking at, both plants are licensed for satellite operation for satellite fields or satellite plants. But Rosita is just the better of the two. I'm sure we'll do a full engineering study to evaluate the cost benefit analysis of resurrecting Kingsville versus abandoning it and moving some of the equipment, including a brand new dryer, which is probably the biggest cost piece involved in the ISR process. But there's a brand new dryer sitting at Kingsville that could be installed at Rosita. And so that's clearly one of the things we'll be doing. So I can't really commit to renovating and operating Kingsville or abandoning it and increasing Rosita's capacity. Obviously need a license adjustment to do that at Rosita, but that's something we'll be looking at early on here because we need to be ready for it. But it's not really any duplicative efforts in terms of getting Rosita up and running to start with.
It's much easier to expand a license rather than obtain one. So I think you guys with the state of Texas probably have a pretty good runway to potentially get that expanded for Rosita, much easier than the new license application.
I think that's a safe assumption. And, just here again, my basic, and I'm not the ISR expert by any means, but just looking at it from an economic standpoint, you have two projects 50 miles, two plants 50 or 60 miles apart from each other that have the same capacity and presumably roughly the same cost structure to run. If you combine those into one, you certainly don't double your cost at that one facility. They may go up, incrementally, 10 or 15% or something, but it's, in terms of the labor to run a plant twice as big versus half as big, not much difference at all. So I think there's some basic economic incentives to begin with that would favor, increasing size at Rosita. Also, it would reduce your bonding as well by abandoning Kingsville and reclaiming it. So, I think that's certainly an initial favor view of mine, and at least some of the board members, is to go that route. But here again, we have to do a complete engineering study to make that assessment.
That makes sense, and the reclamation made some sense with what you guys did on this finalization closing of the transaction, and then also the bonds is also a key point to keep in check as well. So how about the critical path? Maybe you can just speak to that critical path towards production for Encore. I think we covered a little bit of it here, but talk about maybe the top 3 focus points, critical path for production.
Well, I'm going to kind of give it to you, maybe not a direct answer to your question, but the way we view it. And we kind of break it down into short and mid-range and long-term planning. And, short term, I covered, I think, pretty well in terms of modernizing Rosita and getting it ready to go within the next 12 months and developing 43101 or converting resources into 43101 on leases that we've got, as well as additional acquisitions in the area or leasing activity. Those are underway in terms of projects that we've identified and are moving forward on. So those are the short-term focus. Now I'm going to jump to long-term, and I'll come back and revisit the third part of the strategy. Long-term is the New Mexico assets, and we've clearly got a major interest holder in terms of what we do out there, being the Navajo Nation, above and beyond the state regulatory folks there in New Mexico. There's been such a long history and not particularly good history with the uranium and its effect on the Navajo people. And here again, we think that by illustrating that it's a changed industry and a better approach, and by involving some equity participation to make it worthwhile for the local Navajo groups there, that over a period of years, and we're slating it for a 5-year project of education, consultation, working together, and trying to develop that good base work before you start trying to go into production, which is something no one's tried there yet. We've had quite good success with that up north in Canada on sister gold companies. So we think it's a very sensible approach. We think it's the only approach that makes sense. We think it'll be received cautiously at first. You don't develop trust overnight, and you don't develop trust with checks. You do it with deeds, and we think it's the right place to go. And obviously, New Mexico's got the biggest resources in the U.S. and historically has been the biggest uranium producer. It's the real prize in terms of the U.S. for uranium assets. But it's a long-term equation there. You can't go in there and just flip the switch and start. A significant portion of our Crown Point resource that we've had there, 27 million pounds of 43101, has been permitted under NRC permits for a number of years. But so the permitting isn't nearly the issue there as it is, getting the local community support, and that's really the only way to get into production there. So that's our long-term strategy, and I think a very vital third part of it, rather than a project or an asset, is our ongoing desire to acquire other projects, fit into that mid-range and shorter range production view as well. And it all goes back to the consolidation. And not only is it a desire of ours, it's a necessity in the industry, we believe. So that's a clear focus as well.
Yeah, good points there. And with the New Mexico assets, just talking interstate logistics here, with the Texas facilities, would the company be looking at any development in Mexico that would transfer to processing in Texas facilities to produce uranium?
Well, you have to have certain facilities, even on a satellite. You still got to have your resin exchange system there. So you're going to have some facilities at the wellfield site. The transportation across state lines is not that big of an issue. It's been done before. They've had the resin processing. Once you collect the uranium on the resin, it's a very high dollar commodity. And historically, you've had it shipped as far as from Wyoming to Texas by truck, going back in the old days. So it certainly can be done. We've looked at the economics of it. You've still got to have your disposal well on satellites. So there's not that much gain by doing your finishing processing in Texas. I think while economically you can probably pull it off, I think you've got to do your homework and your community relations to where you have support for building your plant there.
Switching over for a moment, we'll couple this in with New Mexico, but just talk about the Arizona assets at this point, where those slot in, maybe the status of some of the projects there as far as the Brescia pipes go. There was some push politically, there was some push to set aside some lands in Arizona. And then, of course, I understand that there was a supporter in New Mexico with regards to this recent bill.
Right. One of the co-sponsor, of course, Barrasso in Wyoming is I've been a longtime supporter of the uranium industry, but also the co-sponsor from the Democrat side in New Mexico. The senator there was, a supporter of the bill as well, and a strong supporter of the enrichment facility down in southeast New Mexico. So that's, I think, at least a bit of a tailwind for us in New Mexico long term. Also a big advocate of First Nation or Aboriginal rights, so that should fit in as well. Like I said, we've got our work to cut out for us to do there, but we're committed to do it. And we view it as a 5-year process. So it's not something that we really see accelerating much or changing that timeline. We just got to stick to it, and I think things will fall into place. In terms of Arizona, those are conventional assets. They aren't amenable to in situ, at least not to current in situ technology. We don't view them as core assets, but we aren't in any sort of hurry to get rid of them. One of the things that we are looking into is through our 40% interest in Group 11, a private company that's looking into in situ alternate technologies of not only uranium but other metals. We're looking into, and by using new lixiviants or solutions to dissolve the metals underground. We are looking at doing some test work on the breccia pipes using different solutions that might make that ore amenable to ISR production, which would change the game on the high-grade breccia pipes considerably. Here again, that's just test work that we have planned. We do not see any conventional production in our future. As I mentioned, Energy Fuels has the White Mesa mill and is the not only the dominant, but the only conventional processing plant in the U.S., and we think likely to remain that way for the foreseeable future. Our expertise has been designed through our plan to be focused on ISR. That's where we've had our success. That's where the bulk of our background is in terms of the staff and the guys on the board. So we don't see, with the possible exception of a breakthrough on the Group 11 technology, doing any production activities on the Arizona stuff, the breccia pipes. They're nice assets. They are permitted for exploration. They are discoveries made on several of them. We have a number of really good projects. I think 4 or 5 of them, I think, are outside of the withdrawal area, so they aren't affected by the land regulations. The rest of them are in areas that have been discussed for a relaxation of those restrictions, and obviously we're in favor of that. Whether it'll happen or not, I would have to say it's somewhat unlikely in the new administration. Don't know if Trump will get around to following through and relaxing those before he leaves, and if he does, I'm not sure how long that would hold in the new administration anyway. So we're sort of in a wait and see there. We're optimistic that we might make a breakthrough with the Group 11 process, which obviously would have immediate impacts to projects that are not in the impaired area or restricted area, but might also conceivably be enough to alter any opposition towards that, assuming we could show that there is an in situ means to produce there. So that addresses the Arizona projects. And then we do have some non-core assets in Utah that we've already begun talking to a couple of firms about taking on.
Yeah, that sounds good. I appreciate the update on the Arizona situation, and it's good to see the New Mexico support from the senator as well. Talk just briefly, you mentioned Group 11 here a couple times. Talk briefly about how progress is going over at Group 11 and result updates on technology you guys are working on.
Well, we've been acquiring a couple of projects. Primarily the focus in Group 11 is in gold, just because it's a high dollar commodity. And here again, if you can make a transformational or disruptive move in the minerals industry, that's high dollar commodity. It's a whole lot easier to make it work on. So that's where the focus has been, and that initial focus has been in getting projects suitable across a variety of geologic environments and mineralizing environment to where it might work. And that's just going to be through test work. Just like when the initial in situ uranium work was done, it's got to be a lot of trial and error and good research to make it happen, with no guarantees of success, but we're optimistic. All the pieces of the puzzle are there. We just need to make them all work together. This year, in the next 12 months, we anticipate doing bench scale testing of core from some of these projects. And we're currently looking at working on a project that's already permitted for drilling, which put us way ahead, and might even progress to the next level of testing should we be able to get that project in. But the projects that we've already acquired and announced publicly in Nevada will require a bit of permitting and then core drilling, followed by column testing using EnviroLeach Technologies, or another 40% holder of Encore, using their proprietary lixiviant or solution to leach the gold.
And they're a 40% holder of Group 11, correct?
Correct. And Group 11 is a private company. Encore and EnviroLeach are the two big holders at 40%, and then Golden Predator has 20%.
Switching over to Kazakhstan for a moment, Kazatomprom, obviously Dennis and Paul know certainly a bit about ISR, I would say. What are your thoughts on, the disruptions happening over there with their production centers, their viability going forward? In my view, unless it's significantly recapitalized, a decline in Kazatomprom production levels.
Yeah, I think that's the way we see it as well. There's at least some talk a few months ago that Cigar Lake and Kazatomprom would plug supply gaps. And we just don't see it that way. Facilities are being idled, and when they come back on, they're reduced. So we don't really see that coming in, to really affect the market too much. A couple of other things. It's the question on Cigar Lake is really they've got such a burn rate on going on care and maintenance, and they've also got a built-in advantage on waiting for contract prices to go higher. It's a real iffy situation as to when they will resume production. And, Canada's not in complete shutdown, but certain parts of it are with this COVID. And progress on COVID's not coming along due to the vaccine as well as perhaps some folks had thought based on recent reports. So that may be offline a lot longer than people think. We'll just have to wait and see. The Kazakhs, I don't think you're going to see a big ramp up in production here.
No, I don't think they can. They've got many, many years of problems ahead and obviously capital problems. And Cigar Lake, we've continued to say that Cameco's between a rock and a hard place, and they can't really buy in spot, and they really can't do much with Cigar either. So it's yeah.
Yeah, and we do think you'll see the spot price rise as a result of them being more active in the spot market. But here again, we don't see it being, we don't see it getting to $40 based on that. 35, I think, is probably pretty easy, just, from my guessing. Outside of it being higher, so it's relatively better, it's not enough to spur any new production. So it's not going to change your supply-demand metric at all.
Oh, not at all. Not at all. Absolutely not. And anybody who's modeled it out, like we have and some others, it's pretty clear that it won't impact. And the other part, Cameco can't buy the full volumes that they need in the spot market. And as that price drives up, Bill, now you're sitting at $35 purchase spot pounds. Tack on your GNA, CNM, and by the way, they pay themselves handsomely. Then I would say, look, they're spending money. If you add all that together, it's significant, and they're trying to sell it into contracts that are in the 40s. Well, their costs after purchasing spot pounds at 35, I can tell you, there's no money to be made.
Right. And I've seen an economic forecast by a former pretty high-profile financier in the uranium business that makes a very good case for their continuing to keep Cigar on ice and just letting the contract price drift higher, even absorbing a short-term loss on some of the shorter-term contracts just to secure a longer-term contract at a higher price going out. And it's a compelling argument. Here again, didn't come out of Cameco, but it came out of a pretty well-established credible source in the uranium banking industry. One thing I might mention just before I forget about it, and we don't come back to it, the Group 11 activities, I want to make one point clear on that. It's privately funded, so it's not a cash drain on Encore or any of the other shareholders, partners. Just wanted to make that one point, that the research we do there will be funded privately.
And certainly is a benefit there to the shareholders of Encore. And yeah, I fully agree. Cameco has plenty of money to keep things floating along. There's no issue there. And I see that strategy makes the most sense. Why would you deplete really a tier one asset for not much of anything? So I think that makes sense, and they can certainly survive this out. And with the time frame that we have in front of us, they have enough cash and obviously credit. They can issue bonds, no problem. I know they can do that to really see through until that higher price comes. So I think they have enough runway left. They'll be fine. Obviously if this somehow, which I can't see how it works at this point, Bill, but if this market delayed out for another 3 to 4 years, obviously they would be a different set of circumstances. But
yeah, and I don't think we're going to have to wait that long. There's just so much positive developing on the demand side. I just don't see how you can push it that far.
Agreed. Well, let's move on here. Just to wrap up a few other questions here, Bill, and
Sure.
Appreciate the extended time and won't be able to get to all the audience questions here, but current price in the stock, current cash on hand, do you guys see any need to raise capital in the immediate term?
Not in the immediate term. We've had some questions from our shareholders about accelerating warrants and that sort of thing. And I'll take this opportunity to say that there's nothing on the table at the moment. We should be funded pretty well for the first year here, or the remainder of 2021 anyway. Towards the end of 2021, it's certainly possible. Market-related funding, if things were to accelerate quicker than we think, then there are a number of things that could change that, but there's nothing in the immediate future. And I think probably most likely to change that would be some sort of an acquisition. As I said, here again, we're still looking. Nothing's pending, or I certainly couldn't talk about it, but we're making a dedicated effort to look for opportunities. And should we be successful on any of those that we see being very accretive to our business plan, then obviously a certain amount of funding would come out of the market. We'd be very likely to not do an entire acquisition based on that. Just like the Westwater, when the whole reclamation bonding was essentially covered by Westwater. They transferred $3 million cash in terms of collateral for bonding to us in that transaction. And so it was certainly not dilutive to our business plan. It was highly accretive, and those are the sort of deals that we're looking for. That one was particularly attractive, but anything we do will have to be accretive to our business plan.
A lot of value adding components to that, whether it's your guys' low G&A costs compared to peers is substantially low. The dilution here for this asset was almost next to nothing. A rounding error, if you will, in the big picture.
Yep.
So these are good things. And so far, this is lining up quite nicely. So I'm sure all the shareholders, most of them would be very supportive for future acquisitions and would probably be willing to continue to write checks as we move here. Well, moving on, Paul Mosaic, he often gets credited for the energy metals success. What's your position on this?
Well, he certainly should get half of it anyway. When we started that company, he and I both founders of it, and there was a shell in Canada. We had a 1.7 million dollar market cap, and the assets that went in all came from projects that I developed in the U.S. And the timing was great. Paul is magnificent in the market side of things, and he basically handled the investment side of the company, and I handled the technical, putting the projects into the company, and later on, interaction with some of our larger shareholders. So it was a good team effort for sure. I don't pretend to have that expertise in the market that Paul had, although I've picked up a bit of it over the years. Certainly, rightfully so, would be half his credit. I don't think that enterprise would have worked without either one of us at that time.
Well, Bill, the company has a 155 million market cap Canadian approximately today. What do you say to potential investors listening, maybe even to existing shareholders at this point? Is the company a short here, or is it just a rounding error?
Here again, I think that the uranium market is so, in terms of the equities, is so, maybe inelastic's the word, I'm not sure, but things happen so quickly. The moves are compounded due to the fact that, in the gold market, you've got 2,000 companies to choose from. In the uranium market, really, if you're looking for producers or potential producers, likely producers, you've got very few. So, I think the risk reward has to be on, short term, who knows, may go up, may go down. Anybody that's looking at uranium for the uranium cycle, in terms of being a serious investment, I don't think you'd want to be short any of the names. I think you'd stand a pretty good chance of having your head ripped off. But, are there trades? Sure. Even at Energy Metals, when we pretty much hit the peak of every, thing that you could do in the market in terms of first to finance, first to this, first to that. It was a perfect storm for the market and ourselves at that point. But even then, we had some disastrous days. Nobody likes to remember those or even thinks about them. But we went to 17 or 18 bucks a share from 17 cents, I think, or 20 cents, and it wasn't straight up. There were some certainly trades on the downside where people could have made some money. So I'm not going to tell you that there won't be those here along for the uranium equities, ourselves included, but everybody else too. But unless you're a short-term trading expert, that's a pretty risky business to be in. I think, for the true investor and not the trader, you've got to trade the cycle, and we've got a uranium cycles are not too often when they come around. You know, we've been waiting patiently, maybe not so patiently, but waiting quietly for 10 years. And when you get one coming, they last longer than a day or two. They last a series of years. I think this one's going to last a lot longer than the last one. It's just set up better and more fundamentally sound, I believe. Maybe not quite as spectacular on the high side. We may not see $150 spot. In fact, I don't think we will, but I think we'll see a lot longer longevity, a lot better longevity to this cycle. So if you're investing in the cycle, you've got to pick your players, and you know, I'm sure people will trade in and out. But if you're in the uranium cycle, you've got to be in it, and you've got to stay in it, I think, because your opportunities for readjustment are generally pretty slim.
Bill, best way for the audience to reach out to you and the company?
Certainly, I'm available. We've got an info at, you know, I direct people to our website, EncoreEnergyCorp.com. You know, we'll get myself or Paul or the appropriate person back to you at, I won't say record time, but certainly within a day or two, maybe 3, if things are really busy, and go from there. But we definitely try and maintain positive shareholder relations and contact everyone that calls in, whether they have 100 shares or 1 million shares. So we're pretty easy to get a hold of, just as long as the investor has a few days patience to understand that we may have pressing matters at any given time.
Well, Bill, it's been fun. Keep up the efforts, and we're looking forward to having some other management members back on the show soon to talk about Encore, and best wishes, and stay well out there.
Sounds good. Sounds good. It'd be good to have Paul back on. He certainly is the technical expert on these matters, and I think would be very interesting for your audience. And I want to thank you for having me back again.